Good morning, students. I am C. Alok. I welcome you all once again on this LVC organized by Board of Studies of ICAI. So, students, today we are going to discuss one more asset-based standard, which is non-current asset held for sale and discontinued operation. In our Indian GAAP, while reading accounting standard, we read AS24. So, AS24 talks about your discontinuing operation. AS24 does not talking about non-current asset held for sale. But this is IND AS 104, which talks about non-current asset held for sale and discontinued operation. So if I segregate or if I divide this entire title, so this will be divided into three parts. One is non-current asset. So wherever non-current asset is there, I will write it as a NCA, okay? Plus HFS, held for sale, plus DO, discontinued operation. So this standard talks about non-current asset held for sale, non-current asset held for sale, and discontinued operation. Why this standard does not talks about current asset held for sale? For example, inventory. So if inventory is held for sale, it is covered under IND AS 2. Okay, it is covered under IND AS 2 inventory. So this standard talks about non-current asset held for sale. And what is the basic difference between this standard and the other standard, for example, inventory? So we understood the definition of inventory, and when we understanding the definition of inventory, we understood that inventory is an asset which is held for sale in the ordinary course of business. It means the objective of the business is to earn income by selling those goods. Okay, but here it is non-current asset. What is non-current asset? For example, your property, plant and equipment, your investment property, your intangible assets. So these are the non-current assets. And if these non-current assets are held for sale, if you have acquired a property, plant and equipment, your intent is not to sell that property, plant and equipment. Your intent is to use that machinery, use that building into your business operations. Okay. So if this non-current asset is available for sale, or the intent of the company is to sell the non-current asset, it means it is held for sale. It will be classified as held for sale. Okay. So we are talking about non-current asset held for sale. And if it is a non-current asset which is held for sale, it has to be presented and classified separately in the balance sheet. Okay. Then we will be talking about discontinued operations. So in this standard, we were talking about three terms very frequently. One is asset held for sale. One is asset, I mean to say non-current asset, asset held for sale. Then we will be talking about disposal group held for sale, disposal group held for sale. I mean to say here I am talking about NCA. Here I am talking about DG, disposal group held for sale. Then we will be talking about discontinued operation, DO. DO. Okay. Sir, what is the difference between asset held for sale and disposal group held for sale? Asset held for sale, I take an example. So you went to Chandni Chowk. There is a factory in Chandni Chowk, let's say, okay, and you want to buy that particular building, or you want to buy that particular factory. Okay, so when you went to the owner has told you that, boss, I can only sell you this building. Otherwise, the entire setup. So I have acquired some licenses, I have some machineries, I have some raw material, I have some, intangible assets, I have some other set of furniture and fixtures. So I'll remove all these assets and I can sell you only a building. So this building, if you are purchasing a building only, it is classified as an asset held for sale. It is an asset held for sale. Okay. Or I can flip my example. I can say that Ambika went to that owner and Ambika told, I want to purchase this building only. So this is a asset held for sale. And again, Kostav went there and Kostav has told to owner, I can buy this entire factory. I can purchase this entire factory. And factory consists of so many non-current assets, for example, building, for example, electronic equipment, office equipment, furniture and fixtures, intangible assets. Okay. Even though if it is a disposal group, I mean to say group of assets, if it is a group of assets, it may contain some current asset also. So my dear friends, please remember, in disposal group, there should be at least a single non-current asset. Otherwise, it could be a combination of non-current asset and current asset as well. So this factory is an example of disposal group. Factory is an example of disposal group. Have you understood this? So earlier we were buying only a building, a single asset. So that is an asset held for sale. Then we bought a factory, and factory consists of so many non-current assets as well as some current assets also. Okay. So two things you need to remember. In disposal group, there could be a combination of non-current plus current. Second, in disposal group, there could be some liabilities also. For example, the company has, the seller has purchased machinery and taken a loan on that. Okay. So the seller is saying that if you buy this factory, you have to acquire my loan also. Okay. So there is a liability which is coming into. Okay. So this factory is a disposal group held for sale. Discontinued operation. What is discontinued operation? So discontinued operation means when the company is curtailing a major line of product. For example, today Tata says that, so I will discontinue my commercial vehicle segment, and I will manufacture only the private vehicle or the vehicle for the private purposes. Okay. So I will discontinue my commercial vehicle section. So wherever plant, so Tata is having a plant in any of the geography or any of the location, they will discontinue this major line of business. So this is known as a discontinued operation. Or let's say Tata is saying that I will stop my Chinese, I will stop my business in China, or I will stop my production, which is into my factory, which is in China. So it is known as a discontinued operations. Okay. So discontinued operation could be curtailment of a major line of product, geography, or location. Okay. So is it clear to you guys? I hope my video is audible and my audio. So I hope my video and audio is okay. So this whiteboard is visible and the voice is also audible. Please confirm quickly. Ambika, Kaustav, Chavi, Pujita, Shantanu, everything is okay? Great. So let's move on to the PowerPoint presentation. So friends, before that, let me give you a entire diagram or entire structure of this particular standard, that what we are going to understand in this particular standard. So then we'll take it up one by one. In this particular standard, let me tell you, so we will revise some concept of IND AS 36 impairment of assets. So I would request you, or to all of you, if you read this particular standard, or if you read any standard, so just read in the group of standards. For example, when you are understanding this asset-based standard, so I would request just take it all the asset-based standard together. Okay, just take it all the asset-based standard together, and that is why Institute has conducted these classes or the series of standard in continuation. Like I have taken all the asset-based standard in the past and in the current period also. Okay. So in IND AS 105, we will touch upon some concept of IND AS 16, IND AS 38, and IND AS 36 also. So as far as the structure of this particular standard is concerned, we are going to discuss, of course, objective. What is the objective of attending these classes? Sir, the objective of attending these classes is we need to become a chartered accountant. Okay, our objective is to become a chartered accountant, and by becoming a chartered accountant, we have to serve the nation and serve our family. Okay, so objective. Then we'll discuss scope, where this standard is applicable, where this standard is not applicable. Okay, so where this standard is applicable, where this standard is not applicable. For example, if inventory is held for sale, inventory by virtue of its nature is always held for sale. So if inventory is held for sale, it is not covered under IND AS 105. It is a current asset. It is covered under IND AS 2 inventories. Okay. Perfect. Thanks, Gomati, for confirmation. Thanks everyone for the confirmation that everything is going well. Okay. Then we will discuss the criteria, the most important part. Criteria for held for sale. I hope the earlier chart which I have described on the whiteboard, you must have written that particular example. What is non-current asset? Example is building. Disposal group, example is factory. Discontinued operation is example is curtailment of major line of product or geography or location. Okay, the business in that particular geography or location. So we'll discuss criteria for classification of an asset as a held for sale. Okay, then we will discuss measurement. If an asset is classified as held for sale, then how is it going to be measured? Okay, then we will discuss presentation and disclosure requirement. Presentation and disclosure requirement of HFS. So this is the structure of the standard. This is the coverage of the standard. Then we are going to discuss discontinued operation. And when I say discontinued operation, we are going to discuss presentation and disclosure of DO, discontinued operation. So this part we are going to cover in today's class. Okay. Are we comfortable so far? Are we able to understand the fundamental of the standard? Are we able to understand? So what is non-current asset held for sale? Non-current asset held for sale are those assets where the future economic benefit will be principally recovered through a sale transaction rather than through a continuing use. For example, when we read IND AS 16, when we read IND AS 38, then we understand that an item has to be recognized as property, plant and equipment, or an item has to be recognized as intangible asset when two conditions will met. One, future economic benefits should be probable and cost can be measured reliably. So future economic benefits should be probable, and we understand that future economic benefit means when we use that particular machinery or property, plant and equipment or intangible asset, we will have some benefit in future. But as far as non-current asset held for sale is concerned, the intent of the company is not to use these assets. The intent of the company is to sell these assets. And hence the definition is non-current asset held for sale are those assets where future economic benefit should be received. Future economic benefit will be received through a sale transaction rather than through a continuing use. So the future economic benefit, the money will be received through the sale transaction. It will not be received through a continuing use because the intent of the company is not to use these particular assets. The intent of the company is to dispose of these particular non-current asset. Okay. So friends, are we comfortable so far? Please confirm. All okay, all clear? Great, great. So what is the objective of this standard? The objective of this IND AS is to specify the accounting for assets held for sale. We'll discuss when an item is classified from a normal property, plant and equipment, normal investment property, normal intangible asset to non-current asset held for sale. Okay. And presentation and disclosure of discontinued operation and presentation and disclosure of discontinued operations. Okay. And we will also discuss the presentation and disclosure of discontinued operation. Now I'm asking a question. You all have seen a balance sheet. You all have seen a balance sheet as per Schedule 3. The balance sheet of a company or a listed company. You all have seen. The balance sheet has to be classified between non-current asset and current asset. The entire balance sheet has to be classified between non-current and current Am I right? You have also gone through IND AS 1. The para 66 of IND AS 1 talks about this current, non-current. Now tell me, what is property, plant and equipment? What is intangible asset? What is property, plant and equipment? What is intangible asset? What is investment property? Is it a non-current item or a current item? Where these items are required to be classified in the balance sheet, is it classified under head current asset or is it classified under head non-current asset? Please tell me. Very simple question. Okay, Remya is saying, sir, it is non-current. What about others? What about others? Property, plant and equipment, intangible asset and investment property. Is it non-current item or is it a current item? It is a non-current item. It is of course a non-current item. Now, why it is a non-current item? It is a non-current item because the objective of the company is to use these assets for more than one period. Please remember the definition. The definition of PPE was, it is expected to use for more than one period, more than 1 year. Okay. So it means the objective of the company is to use these assets for a longer period of time. Okay. Now, if the intent of the company is to dispose of these assets, for example, the company has 2 buildings, the company has 2 machineries. So the company has 2 buildings. Due to the cash crunch, the company has shifted its another building operations to a first building. Okay. So the company has vacated one building and company wants to dispose of this building. What does it mean? It means company does not want to use that particular building and company wants to sell this building. So this building, this PPE is classified as held for sale. Okay. Now my question is, where this particular building which is classified as held for sale need to be presented? Is it under head non-current asset or under head current asset? So friends, you all are correct. Sir, property, plant and equipment, intangible asset and investment property is required to be shown under non-current asset. But my question is, if these items, or let's say in my example, this building, one of the building is held for sale, the company wants to sell this building, company does not want to use this building. So where this particular building has to be classified, is it under non-current or is it under current? Please tell me, is it under non-current or is it under current? So Ambika is saying non-current asset. Okay. Shantanu is saying, sir, this building which is held for sale has to be classified as current. You're right. You're right, Shantanu. Why? Why? Because since it is held for sale and the intent of the company is to sell immediately. Okay. Doesn't matter whether the company is able to sell immediately or not, but the company wants to sell this particular item, this particular fixed asset, this particular building, and hence this non-current asset held for sale has to be shown under head current asset, under head current assets. So one thing is clear. Yes, we are right. So one thing is clear, that it will be shifted from non-current asset bucket to current asset bucket. Okay. And when it is shifted from non-current asset bucket to current asset bucket, it means IND AS 16 discounting will be discontinued. IND AS 16 property, plant and equipment accounting will be discontinued. Okay. So it will no longer be a property, plant and equipment. It will become a non-current asset held for sale, and hence the accounting requirements will be followed as per IND AS 105. Is it okay? Friends, are we comfortable here? Are we able to understand what this standard is expected to understand us? Please respond quickly. Costa, is it clear? Okay. Scope part. Coming to the scope part, the classification and presentation requirement of this IND AS. So the classification and presentation requirement of IND AS 105 is applicable to all recognized non-current assets and to all disposal group of an entity. So we discussed that this standard, the classification and presentation requirement of this particular standard applies to all recognized non-current asset. So whatever non-current asset has been recognized as per the respective standard, okay, so this standard classification and presentation requirement applies to recognized non-current asset. So this standard does not tell which item has to be recognized as non-current asset. Okay, so non-current asset has to be recognized as per IND AS 1 or the respective standard. Okay, so the classification and presentation requirement of this IND AS apply to all recognized non-current assets and to all disposal group. If the company has 5 disposal group, for example, the company has 5 factories, okay, and the company is selling these factories, or the company is supposed to sell these factories. So this is a disposal group. So it applies to disposal group also, okay. And disposal group, please remember one thing: for making a group as a disposal group, for making a group of asset as a disposal group to be covered under IND AS 105, at least one of the asset in the disposal group should be a non-current asset. Okay, so disposal group may be a combination of your non-current asset, your current asset, and your liabilities also. Okay, for example, if the company is selling a factory, there could be some raw material lying with the factory, and there could be a combination of assets lying in the factory. For example, this plants, sheds, shelter, okay, furniture and fixtures, equipment, machinery, building. So these all are the combination of the assets which is lying in the factory. Okay, the measurement requirement of this IND AS apply to all recognized non-current asset in disposal group. Okay, and the measurement requirement is also applied to recognized existing non-current asset and disposal group, except for some scoped out asset. Sir, what does it mean? When we further read this standard, or when we further understand this standard, we will understand that once an item has to be classified as held for sale, so we need to understand two things. First, एक item, एक asset को हम HFS में classify कब करेंगे? So we need to discuss when an item has to be classified from a normal non-current asset to non-current asset held for sale. Okay, so we need to understand the criteria. Then we need to understand when an asset has been classified as non-current asset held for sale, then at what value it has to be measured. Okay, this standard says that it has to be measured at lower of carrying value and fair value less cost to sell. Okay, it means when a particular property, plant and equipment will be classified as a PPE held for sale, in that case fair value less cost to sale is required to be measured on that date. Okay, apart from carrying value, fair value less cost to sale is required to be measured on that particular date. Okay, but there are some scoped out asset on which the measurement requirement of this standard, I mean to say fair value less cost to sale, is not applicable. Okay, so what are those standards? Those items, those assets are those items which is covered under the specific standard. For example, deferred tax assets. Okay, so there is no fair value less cost to sale for deferred tax asset. Deferred tax asset has to be calculated as per IND AS 12, which is on the basis of your temporary differences. Okay, any problem so far? Any doubt? Asset arising from employee benefit. If there is an asset arising from employee benefit plan assets, it is covered under IND AS 19. You will read this IND AS 19. Then financial assets, you already have read this IND AS 109. If there are financial assets within the disposal group, okay, in that case, or if the financial assets are held for sale, which is covered under FVTPL, fair value through profit and loss. Okay, so these kind of financial assets are measured as per IND AS 109 and does not measure as per IND AS 105. Biological assets. In the next lecture, we will understand IND AS 41 agriculture. Agriculture includes biological assets. So if there are non-current assets which are measured at fair value less cost to sell in accordance to IND AS 41, it is outside the purview of IND AS 105. Contractual rights under insurance contract as per IND AS 104. So basically, these are those items for which specific standard is available, and according to that standard, we are measuring these items, and hence 105 will not be applicable on these particular items. Classification is non-current. So I told you that the asset classified as non-current in accordance with IND AS 1 shall not be classified as current asset until they meet the criteria to be classified as held for sale in accordance with this IND AS. So I told you. So this IND AS does not tell you which item is non-current and which item is current. Who will tell you what is non-current and what is current in the balance sheet? Ambika, who will tell you what is current and what is non-current in the balance sheet? Chavi, Bemya, who will tell you, which standard will tell you what is current and what is non-current? IND AS 1. IND AS 1 will tell you what is current and what is non-current. Okay, this standard will not tell you what is current and what is non-current. And it says that this standard says that if an asset is classified as non-current according to IND AS 1, it shall not be reclassified as current until and unless the criteria under this asset will be met. So we will tell you, we will understand, I will tell you what is the criteria for classification of an asset as held for sale asset. Okay, so we will discuss what is the criteria for classification of an asset as held for sale asset. Okay, asset of a class that an entity would normally regard as non-current that are acquired exclusively with a view to resell shall not be classified as current. Standard says that, for example, there is an asset which is normally regarded as non-current. For example, PP, property, plant and equipment, intangible asset, investment property. These are the items which are normally regarded as non-current and which are acquired exclusively with a view to resell shall not be classified as current. For example, a company has acquired a building and the intent of the company is to sell that building, okay, resell that building. So standard says that if an item which is normally a non-current item shall not be classified as current item, even though it is acquired exclusively with a view to resell, unless they meet the criteria to be classified as held for sale. So if a company has acquired a property, plant and equipment, the intent is to resell that property, plant and equipment, even though it will not be classified as current until and unless it met the criteria of held for sale. Sir, what is the criteria for classification as held for sale? We will discuss. Okay. So this is something which we are discussing as a scope part of this particular standard. Any doubt here? Any problem here? So Purushottam, I haven't received your mail. Request you to please send your mail again. Probably it may went into spam. My email ID is caalokgarg@gmail.com. Okay. So please write to me again. So I'll share that. Non-current asset held for sale. This term refers to an individual asset or group of assets. Okay. So if it is an individual asset, we will call it as a non-current asset. If it is a group of assets, we will call it as a disposal group. Okay. An individual non-current asset is regarded as held for sale if the carrying amount will be recovered principally through a sale transaction rather than through continuing use. We have discussed that what is the intent of this held for sale, what is the objective of this held for sale, and from held for sale asset, since we are telling it as an asset, held for sale asset, then from where the future economic benefit will receive? The future economic benefit will be received through a sale transaction rather than through a continuing use. Okay. What is a disposal group? A disposal group is a group of assets to be disposed of together as a single transaction. Please remember, for better understanding, please remember non-current asset held for sale building. Okay. Disposal group held for sale factory. Okay. So if you remember these examples, you will able to correlate, you will be able to relate this standard very easily. Okay. Together with liabilities directly associated with those assets that will be transferred in the transaction. The group includes goodwill acquired in business combination if the group is a cash generating unit. It says that the disposal group may be a cash generating unit. Friends, have we discussed the concept of cash generating unit? Have we discussed the concept of cash generating unit? Yes, we have discussed the concept of cash generating unit in IND AS 36, impairment of assets. Okay. We have discussed this concept of cash generating unit in impairment of assets while reading impairment of assets. Okay. Classification is held for sale. Now, this is the most important part. Let me take you on the whiteboard. We discussed the objective part, we discussed the scope part, and so far we have understood what is the difference between non-current asset held for sale and disposal group. Okay. Now we are discussing criteria for classification as held for sale. So we discussed that the objective of non-current asset held for sale is to receive the future economic benefit through a sale transaction rather than through continuing use. Okay. So now when a normal machinery which is covered under PP will be classified as held for sale, standard says that it will be classified as held for sale if two conditions will be satisfied. One, it is available for immediate sale in present condition. It is available for immediate sale in present condition. It is available for immediate sale in present condition. Ambika, now you will understand that when an item will be classified as held for sale. Okay. So criteria for classification as held for sale. When a property, plant and equipment will be classified as held for sale, the first criteria is it is available for immediate sale in present condition. My dear friends, please remember these two words. Immediate sale in present condition. Okay. For example, a person wants to sell a factory. Okay. And he has put a board for sale in front of the gate. Okay. A buyer came and a buyer has asked that, yes, I want to buy this factory. So what is the price? So he told the price is, let's say, 20 crores rupees. He agreed for the price, but the seller has told him that I have some pending orders, and so I will sell this factory only then when the pending order will be completed. Okay. So it could took around, let's say, 5 months, 6 months, or 8 months. Okay. So in this case, Purushottam, whether this factory is available for immediate sale in present condition, answer is no. It is not available for immediate sale in present condition. So even though the management wants to sell this factory, but still it cannot classify this as a held for sale. Okay. Second example could be a company wants to sell its building. Okay. And for sale board was there on the gate of the company. A buyer came and wished to say that I want to buy this building. So he agreed for the price also, but the seller or the company has told him that I want to shift my head office into a new building, and my new building is under construction. So when this new building will be completed, only then I can sell my building. Okay. So in this case, the building is not available for immediate sale in present condition. Okay. And hence, even though management wants to sell this building in near future, but still it cannot be classified as ISPC condition. It cannot be classified as held for sale. It is not meeting the criteria of ISPC. It is available for immediate sale in present condition. Available for immediate sale in present condition. Okay. So this is the first step. Second, what is the second criteria? And available for immediate sale in present condition, and sale is highly probable. Sale is Hindustan Petroleum. Sir, what is HP? Hindustan Petroleum. Sale is highly probable. If you remember, sir, how we will remember this ISPC? Available for immediate sale in present condition. So please remember, internet service provider company. So you all must be using internet, okay? Because internet is the blessing by which we all are interacting with each other. Am I right? I'm using internet for teaching. You are reading. You are using internet for studying. Am I right, Ambika? Pujita, am I right? So what is the full form of ISPC? Just for your memory, internet service provider company. But as per standard, what is the meaning of ISPC? Available for immediate sale in present condition. Is it right? Available for immediate sale in present condition, and sale is Hindustan Petroleum. It is not Hindustan Petroleum. It is just a way to remember. Sale is highly probable. Sale is highly probable. Okay. Is it okay? Guys, are you able to remember these two conditions? It is available for immediate sale in present condition, and sale is highly probable. So for sale is highly probable, there are also some conditions I will explain. But first, I need to take up this first part. It is available for immediate sale at present condition. So let me again share my presentation. So available for immediate sale in present condition. To qualify for classification as held for sale, it must be available for immediate sale in the present condition, subject only to terms that are usual and customary for sale of such assets or disposal group. What does it mean? For example, the company wants to sell a building, and the company will sell a building immediately, or the company will hand over the position of the building after doing the shifting. Okay, after doing the shifting. For example, when you buy a flat, when you buy a flat in resale, so when you go to see the flat, so the family was living there, okay, or let's say the tenant were living there, okay. So the owner said that, so whenever you will have a deal, so this flat will be immediately vacated, okay. So the time period could be customary in nature. The time period could be customary in nature, okay. So for getting classified as available for immediate sale, it must be available for immediate sale in present condition. So whatever present condition is there, it's not like that first I will renovate the building, then I will sell the building. It means it is not available for sale in present condition, okay. For example, first I will process the raw material, I will complete my pending order, then I can sell the building. So it means it is not available for immediate sale in present condition, okay. Thanks, Preeti. So I hope you will be able to learn these jargons in your life, at least till the CA final examination. Okay. So it must be available for immediate sale in present condition. This is taken to mean that an entity currently has the intention and ability to transfer the asset to a buyer in a present condition. Now it also says that there must be an intention and ability. What does it mean? For example, the company has an intention to sell the asset, but the company does not have a ability to sell the asset. For example, there was a litigation which is going on that particular building, and the court has put a stay on that particular building. In this case, although company wants to sell the building, but the company is not able to sell the building. The company cannot transfer the clear title in favor of the buyer. Okay, so what are the two things? One, it should be available for immediate sale in present condition. Second, there must be an intention and ability to transfer the asset to a buyer in present condition. Okay. When sale will be construed as highly probable? Sale will be construed as highly probable when 5 conditions will met. When 5 conditions will met. What are those 5 conditions? Condition number 1. When sale will be considered as highly probable, first, management is committed to plan. Management is committed for a plan to sell the asset. Or disposal group. So wherever I say asset, it could be disposal group also. Management is committed for a plan to sell the asset. Second, active program to locate a buyer has been started. Active program. So first one is management is committed. The second one is active program to locate a buyer has been started. Third, marketed at a reasonable price. Okay. So third one is it is marketed at a reasonable price. Okay. Fourth, sale is likely to conclude in 1 year. Sale is likely to conclude in 1 year. Okay. Last, it is unlikely that the sale plan may be withdrawn. Okay, so let's discuss this one by one. So sir, when a non-current asset will be classified as held for sale, I have told you that a non-current asset will be classified as held for sale when 2 conditions will be met. 1, asset is available for immediate sale in present condition. Second, sale is highly probable. Sir, when an asset will be considered as available for immediate sale in present condition, it is considered as available for immediate sale in present condition when the time period for sale the asset will not be other than the time period customary in nature. For example, time period in shifting the goods from one place to another. Okay. Second, there must be intention and the ability to transfer the asset in favor of the buyer. Okay. Second, the sale must be highly probable. Sir, when a sale will be considered as highly probable when 5 conditions will be met. What are those 5 conditions? Condition number 1, management is committed to a plan to sell the asset. What does it mean? It means normally management has taken this decision in the board meetings, And in the board meetings, these items have been minuted in the board minutes. Okay, it means management is committed for a plan to sell the asset. So management has given a go ahead for discontinued operation, for disposal group, for sale of an asset. Okay, so it is committed for a plan to sell the asset. Second, active program to locate a buyer has been initiated. So management has started giving the advertisement. So management has started inviting the tenders, inviting the quotations. Okay, for example, this item has been listed on 99acres.com. This item has been listed on olx.com. Okay, or for example, the company has invited inquiries that we want to sell our furniture, we want to sell our computers, we want to sell our laptops, we want to sell our vehicles. Okay, so management is inviting tender quotation for that. Okay, marketed at a reasonable price. Marketed at a reasonable price means it should not be quoted at a more than the market price. For example, market price of a particular building in that vicinity is, let's say, 1 crore, and management is demanding 1.5 crore. In that case, it will not be considered as a sale is highly probable. Okay. Fourth point, management, according to the judgment of the management, so they are committed to sell the asset. They have started locating a buyer. They have marketed at a reasonable price, and they are sure that the sale is likely to conclude within 1 year. So they are very sure that the sale is likely to conclude within 1 year. And due to the development, due to such development, it is unlikely that the sale plan may be withdrawn. For example, so they have shifted their factory from one place to another. They have stopped the production. Okay, and they have started the production in another place. They have shifted their workers from that particular location to another location. It means it is at such an advanced stage that it is unlikely that the management may come and say, we will not sell the factory. Okay, so it is unlikely. But sir, whether it will be 100%, it could not be 100%. There could be a situation where management may cancel his plan, but 99% it is unlikely that the sale plan may be withdrawn. So if these 5 conditions will be satisfied, then it will be considered as sale is highly probable. What is meant by probable? Probable means more likely than not. More likely than not means 50% chance. What is highly probable? Highly probable means significantly more likely than not. Means the chances are greater than 90%. The chances are greater than 90%. So the chances are greater than 90% that the sale will be conceptualized. Sale will be virtualized. Okay. Okay. Have you understood? So Purushottam, please read IND AS 1 para 66 of IND AS 1. There you can understand what is non-current asset, what is current asset. Please try to understand, students. I am teaching you IND AS 105. And if you ask questions from different standards, it will be very difficult for the other students, because in the live virtual classes, there are students who have already completed the syllabus and coming here for revision. Okay. So these are the classes from the examination perspective, where a student can have an entire understanding on that particular standard. But Purushottam, if you want to understand what is non-current asset and what is current assets, the definition is given under IND AS 1. It says that it talks about the current asset. What is current asset? If the current asset is expected to be realized within 1 year, if it is a cash or cash equivalent. Okay, so there are some items. So if it is available for sale in the ordinary course of business, it is held for sale. So these kind of items should be classified as non-current asset. Sorry, current asset. And what is non-current asset? An asset which is not a current asset is a non-current asset. Okay. So these classes are not driven to taught a single student, but to a mass student at all India level. Okay. So management is committed for a plan to sell the asset. Active program to locate a buyer has been started, marketed at a reasonable price. Sale is likely to conclude in 1 year, and it is unlikely that the sale plan may be withdrawn. So students, have you understood the criteria for classification is held for sale or not? I have explained every step here. Students, can anyone summarize this ISPC or HP? Thanks, Pujita, for confirming. Can anyone will summarize when an item will be classified as held for sale? It will be classified as held for sale when it is available for immediate sale in present condition and sale is highly probable. When sale is considered as highly probable, it will be considered as highly probable means there is more than 90% chance of getting the sale materialized when this 5 condition will be satisfied. Management is committed. Second, active program to search a buyer has been started. Third, the asset has been marketed at a reasonable price. Okay, then sale is likely to conclude in 1 year and it is unlikely that the sale plan may be withdrawn. Okay, now let me share my screen again. So student, again these 5 items are there on the screen which we have already discussed. Now case study. An entity is committed to a plan to sell a factory. The production cycle is 6 months and pollutants are involved. The company must meet its existing orders. Dismantling the equipment and cleaning up the pollution will put the facility out of action for 6 months. Does the factory meet the criteria of available for immediate sale in present condition? Thanks, Usha, for confirming. So guys, the company wants to sell a factory, okay, and the production cycle is 6 months and there are some pollution which is getting out of the chimneys of the factory, okay, and this dismantling and equipment and cleaning up the pollution will take around 6 months. So can we say this factory is available for immediate sale in present condition? Answer is no. We cannot say that this factory is available for immediate sale in present condition. Okay. Second, an entity is committed to a plan to sell its headquarter. To sell its headquarter. So Ambika, are you asking any question when it is available for sale? So Ambika, do you have any query? So please answer this question. Please answer the question of this case study. An entity is committed to a plan to sell its headquarter and has initiated action to find a buyer. Situation number 1. The entity intends to transfer the building to a buyer after it vacates the building. The time to vacate is normal. So the management is saying that we will vacate the building. Okay. So the vacation time is normal. Let's say hardly it's a 1 week or let's say 5 days, 10 days. So whether this building will be classified as held for sale, can we say it is available for sale in present condition? So Pujita has summarized beautifully this criteria for held for sale. So Pujita has summarized that, sir, ISPC, it is available for immediate sale in present condition. Sale subject to ordinary terms and ability and intention to sale must be there. Highly probable sale. So 1, it is committed to sale. Second, active participation to search a buyer. Reasonable price. Sale within 1 year. Unlikely withdrawal or plan. Great, Pujita. Absolutely amazing. So friends, in this case, the entity want to transfer the building to a buyer after, of course, vacating the building, and the vacation time is normal. So in this case, it will be considered as held for sale in immediate sale in present condition. Okay. So the condition is met at the plan commitment date. Situation number 2. The entity will continue to use the building until a new building is built. The building will not be transferred until construction is completed. Can we say that this building is available for immediate sale in present condition? Can we say? We cannot say because the condition is when the new building will build, when the new building will be constructed, we will shift from this building. So it is not meeting the condition. Okay. The delay demonstrates that the building is not available for immediate sale and thus the criteria is not met, even if a firm purchase commitment has already been entered into. What is firm purchase commitment? It is binding contract. It is binding contract. Okay. For example, even though agreement has been done, but still it will not be classified as held for sale. Why? Because it is not meeting the first condition. ISPC, Internet Service Provider Company. ISPC, available for immediate sale in present condition. Okay. So Preeti is saying 1 yes, 2 no. Yes, you're right, Preeti. Again, one more case study. Situation number 1. An entity is committed to a plan to sell a manufacturing facility. So an entity is committed to plan to sell a factory and has initiated action to locate a buyer. But there is a backlog of pending orders. Situation number 1. The entity intends to sell the factory with its operations, and any uncompleted order will transfer to the buyer. So the company wants to sell the factory as it is in the present condition. Okay. If there is any pending order, the buyer will complete the pending order. Tell me whether in situation 1, it is meeting the definition of ISPC. Whether it is meeting the definition of ISPC. So Akanksha is asking, if someone has not studied the subject at all, can we study from these classes for passing exam? Are they enough? Yes, Akanksha, these are more than enough. These are more than enough. So if you see the past pattern, if you see the last examination paper of financial reporting, so most of the questions are based on the study material or revision test papers. Okay. So most of the questions are based on the study material. Okay. So if you attend these classes, okay, then you will revise these classes and you will go through with the study material as well as revision test papers. Then you even will not only pass the exam, rather you will score good exam in the mark in the examination. Okay, it could be 80%, it could be even 90%. The students have scored even 80%, 90% marks by using or by studying from these live virtual classes. Okay, so the base is only study material for these classes. Now, what is the answer of situation number 1? Is it classified as held for sale, or this factory will not be classified as held for sale? So Ambika is saying yes, Chavi, Preeti, Shantanu, Usha, everyone is saying yes, it is available for immediate sale in present condition, because the company is selling the factory as it is in the present condition. Situation number 2. The entity intends to sell the factory, but without its operation. So entity does not want to sell its operation. Okay. And it does not want to transfer it until it clear all the pending orders. Now, what about second situation? What about second situation? It is not available for immediate sale in present condition. So situation number 2 is not meeting the HFS definition. Okay, HFS criteria. So friends, we have covered a lot of examples here, okay? And these examples are also there in your study material. Now, exception to 1 year rule. Now you will say, for example, sir, we want to sell this building, okay? And while preparing books of accounts in March 20, okay? So let's say the company has classified a building as held for sale in last year. In June 19, okay, in June 19, the company has classified a building as held for sale. While preparing the March 20 accounts in June 20 or in July 20, so we will found that the company was not able to sell this building even till now. Why? Because the company was supposed to sell this building in February or March, but due to this COVID situation, the buyer becomes bankrupt, or the company could not sell this particular building due to the authorities which were not operating due to this COVID. Okay, sir, whether this exception to 1 year rule will be applicable, I mean to say, since it has already been passed 1 year, can we say that still it is classified as held for sale? Or even we are not expecting that this COVID situation will be better in next 6 months or 8 months, and the authority will not operate physically. And hence we will not be able to transfer this building for the next 6 months or 8 months. So can we still classify this building as held for sale? The answer is yes. Standard says that an extension of the period to complete sale may extend beyond 1 year due to the circumstances beyond the entity's control. So if the circumstances are outside the entity's control, then even though 1 year has been crossed, still it will be classified as held for sale. But if it is within the entity control, then it will not be classified as held for sale. For example, this COVID situation. For example, this COVID situation is circumstances beyond the entity's control. Okay. So unexpected condition. For example, what is the circumstances outside the entity control? First, it could be by act of God. Second, unexpected condition imposed by buyer or third party after the firm purchase commitment is obtained. So the buyer has entered into the binding contract, but buyer has also imposed some condition further. For example, when the transaction was supposed to be executed, buyer has clarified that I will not purchase the factory until and unless you will acquire this license from the authority, because the authority will ask for so many papers and there are some old grievances which has to be cleared by you only. Okay. Second, unexpected circumstances delayed the sale or disposal of asset or disposal group held for sale. What is this? This is act of God, like COVID, flood, or anything else. Okay. In such circumstances, asset or disposal group will be still classified as held for sale. Okay. Kejri Vidyut Limited. Kejri Vidyut Limited. So Purushottam, it is from the date when management is committed to sell the asset. Technically, first of all, management is committed, then after that the procedures will started. So Kejri Vidyut Limited, an energy sector company, is committed to selling one of its business lines. This requires regulatory approval. It could take more than 12 months to obtain this approval. Okay. However, a binding contract have been signed before approval can be obtained. In the present case, sale is highly probable within a year. Okay. Sale is highly probable within a year. In this situation, the condition for exception to the 1 year limit would apply. As the sale is highly probable, it may be classified as held for sale even though it extends beyond 1 year, because it is outside the entity's control. Okay. So it could take, not necessarily that it will take, but it could take more than 12 months. And even though it will take more than 12 months, still it will be classified as held for sale. Okay. So friends, this was for non-current asset held for sale. Non-current asset held for sale. Now, what is meant by abandoned asset? What is meant by abandoned asset? So I believe these conditions have been learned by heart. Okay, you have understood these conditions. Any query so far? So that I'll move on to the next step. Yes. What is meant by abandoned asset? So we discussed about non-current asset held for sale. We discussed about disposal group. Disposal group is nothing. It's a group of assets, and in those group of assets, some current asset could be there, some liabilities could be there. Okay. Now, what is meant by abandoned asset? Abandoned asset. Whether abandoned asset can be classified as held for sale. Whether abandoned asset can be classified as held for sale. Whether abandoned asset, double A, whether abandoned asset can be classified, whether abandoned asset be classified as held for sale. I'm asking, first of all, we need to understand what is abandoned asset. For example, there is a garments company. For example, there is a garment company. Okay, this garment company has 5 machinery. Let's say 4 machinery. Okay, not 5, 4 machinery. 1, 2, 3, 4. So due to COVID, the demand has been declined. Due to COVID, the demand and decline. Due to COVID, the demand has been declined. The demand declined. And due to the decline in demand, the company has stopped using this machinery. The company has stopped using the machinery number 3 and 4, and they kept this machinery in godown. Or the company has seal packed this machinery in the factory premises. The company has covered this machinery in factory premises, and the company will use this machinery when the demand will pick up, when the demand will grow. So friends, these machinery will be known as an abandoned asset. These machinery will be known as an abandoned asset. Now my question is whether the abandoned asset will be classified as held for sale. Whether the abandoned asset will be classified as held for sale, answer is no. Why? Because the intention of the company or intention of the management is not to sell this machinery. The intention of the management is to receive future economic benefit through future use, through using this machinery in future. Okay, through using this machinery in future, and hence abandoned asset will not be classified as a non-current asset held for sale. It will still be classified under non-current asset under the head property, plant and equipment. Is it clear? Okay. Now let's do a case study on this. So a non-current asset that is to be abandoned shall not be classified as held for sale. This includes non-current asset or disposal group that are to be used to the end of their economic life, and non-current asset or disposal group that are to be closed rather than sold. Okay, because its carrying amount will be recovered principally through the continuing use. Entity ceases to use a manufacturing plant because demand has been declined. However, the plant is maintained in the workable condition and it is expected to brought back into use when the demand will rise. Hence, it is not therefore abandoned, and the entity may not, for example, stop charging depreciation or treat it as held for sale. So this plant will not be treated as held for sale because the entity does not want to sell this plant. The entity wants to use this plant in future when the demand will come, and the depreciation is going to be charged on this particular plant. Okay, so the depreciation will not be stopped because as per IND AS 16, depreciation will be charged when it is available for use. Okay, now coming to the measurement part. Okay, so let me take you through the measurement part. Any query so far? We have covered the concept of abandoned asset also. Now we are moving into the measurement part. So let me understand you guys this measurement part with the help of an example first. So Preeti is saying, but sir, if they are not going to be used in future, so Preeti, again, then we need to see whether that particular plant in future, so as of now, it is intention of the management to use in future. But in future, for example, the management thinks that the demand is not getting picked up, or let's say this asset will not further be used, and you need to see whether that is available for immediate sale in present condition or sale is highly probable. Then you need to see the criteria. If those criteria will be meeting, in that case it will be classified as held for sale. Okay, understood, Preeti? Any other question? Yes, so we are discussing measurement part, measurement. So we are discussing measurement of non-current asset or disposal group. So while discussing disposal group, there will be a concept of impairment as a CGU also. So we'll discuss that also. So now coming to measurement of NCA held for sale. For example, there is a machinery. Okay. So the carrying value of the machinery, is 5 lakh as on 31st March 2019. Okay. Remaining life is 10 years. Remaining life is 10 years. Okay. So carrying value of machinery is 5 lakh as at 31st March 19. Remaining life is 10 years. Okay. And this machinery is meeting HFS criteria as on 30th June 2019. As on 30th June 2019. Okay. So calculate the accounting impact. Calculate the accounting impact of such event. The question is clear? Question is clear? The carrying value of machinery is rupees 5 lakh as on 31st March 19. The remaining life is 10 years. SLM method is used. Machinery is meeting held for sale criteria on 30th June 2019. Calculate the accounting impact of such event. Okay. So as far as measurement is concerned, standard says that before classification is held for sale, or rather I would say on the date of classification is held for sale, calculate the carrying value of the asset as per respective standard. Step one. So before entering into the कमरे of IND AS 105 के कमरे में घुसने से पहले, before entering into the room of IND AS 105, we need to calculate the carrying value of such machinery. Step 1, calculate carrying value of machinery. Calculate carrying value of machinery as at 30th June 2019 as per respective standard. As per respective standard means as per IND AS 16. Am I right? So had this machinery been an intangible asset, so the carrying value should be calculated as per IND AS 38. Had this machinery been a investment property, the carrying value has been calculated as per IND AS 40. So what will be the carrying value? Ambika, what is the carrying value? Purushottam, what will be the carrying value on 30th June 2019? What is the carrying value? You remember under IND AS 16, I have told you that for calculating the carrying value, you need to see whether you are applying cost model or revaluation model. For example, if you are applying cost model, in that case, it will be original cost minus accumulated depreciation minus accumulated impairment loss. It means for calculating the carrying value, you have to charge depreciation. You have to calculate impairment loss also. If there are indicator of impairment, you have to calculate the impairment loss also. Okay, you have to calculate the impairment loss also. So you need to calculate the carrying value. Guys, what is the carrying value on 30th June 2019? So it is 487,500. Okay, because the remaining life is 10 years, it means per annum depreciation is, so it is 5 lakh minus per year depreciation is 50,000. 5 lakh divided by 10 multiplied by 3 by 12. So 50,000 divided by 4, 12,500. So it becomes 4,87,500. So it means step 1 is calculate the carrying value on the date of classification. Calculate the carrying value on the date of classification H per respective standard. It means you have to calculate the depreciation. You have to charge the impairment loss if it is there. If indicators are there, you have to charge impairment loss also. And after that, you have to arrive at a carrying value, because the definition of carrying value is cost minus accumulated depreciation minus accumulated impairment losses. Okay. Step 2. Calculate fair value less cost to sell on the date of classification. Calculate fair value less cost to sell on the date of classification as at 30th June 2019. Calculate the fair value less cost to sell as at 30th June 2019. Okay. For example, in this question, the fair value less cost to sell, the fair value less cost to sell is given at 4,25,000. It is given at 4,25,000. Okay. So in this case, step 3 is the lower of step 1 and step 2. Step 2 will be the value of lower of step 1 and step 2 will be the value of non-current asset held for sale. So non-current asset held for sale is going to be recognized at lower of carrying value and fair value less cost to sale. What is lower? 487,500 and 4,25,000. Which is lower? 4,25,000. What will be the accounting entry? Let me remove this thing here. So what will be the accounting entry? The accounting entry will be machinery held for sale debit by how much? Lower of carrying value and fair value less cost to sale, 4,25,000. To machinery PPE account, how much? 487,500. So this is lower of carrying value and fair value less cost to sell. This is carrying value. The differential will go to P&L. Loss on classification as HFS. Debit. This will go to P&L. How much amount? 50. How much amount? 60 to 500. Am I right? Okay. This will go to P&L. So this will be the accounting entry. Is it clear? Friends, is it clear or not? Please confirm. Ambika, Pujita, Purushottam, Kaustav, Nanda, Shreya, Chavi, Priya, is it clear? Okay. 6 students have confirmed. So Akanksha, it is not 4,50,000, it is 4,87,500 because only 3 months depreciation will be charged. So let me share my presentation once again. So first of all, I am explaining the concept. I am explaining the concept in the whiteboard. Then I am coming to my presentation so that you will have a revision. So you will have a revision side by side. Okay. So measurement immediately prior to reclassification is held for sale, like we have seen in step 1. In step 1, immediately before the classification of asset as held for sale, the carrying amount of the asset is measured in accordance with the applicable IND AS. For example, IND AS 16, IND AS 38, or IND AS 40. If there is an impairment loss, it has to be recognized in P&L. But sir, if the asset was valued as per revaluation model and revaluation surplus was there, then what will happen? In that case, that loss will be adjusted from the revaluation surplus as per IND AS 16 or IND AS 38. Okay, so it will be treated as a revaluation decrease. So we need to measure it lower of carrying value and fair value less cost to sell. We discussed this, like 487,500 and 425. If there is any impairment arising upon reclassification as held for sale as a result of B being less than A, for example, in this case, 62,500 will go to P&L as a loss on reclassification. Okay. If there is a gain, for example, the fair value less cost to sell has been increased. For example, on the reporting date, the asset has not been sold. So on the reporting date, this 425 becomes 5 lakh. For example, 75,000 rupees have been increased. So in this case, standard says that whatever we have debited in the past on account of impairment, to that extent only impairment can be reversed, or to that extent only increase can be recognized. For example, in this case, how much loss has been recognized? 62,500. So in this case, even though the fair value less cost to sell become 5 lakh subsequently, still it will not be recognized at more than 487,500. Okay. So same concept. So whatever loss we have recognized, we need to restrict our gain, increase in fair value less cost to sell subsequently to that particular extent. Okay. If the sale is expected to occur beyond 1 year, so what is the formula? Fair value less cost to sell. So while calculating cost to sell, this cost to sell will incurred when the sale is made. So standard says that if the sale is expected to occur beyond 1 year, in that case, the cost to sell will be discounted at present value. For example, the fair value is 5 lakh rupees for an asset, and the entity is expecting that the asset will be because some regulatory things are involved in this. So entity is expecting the sale is highly probable, but it could be concluded in 15 months. Okay, and at the time of sale, around 50,000 rupees expenditure will be incurred. So in this case, 50,000 will be discounted at present value, and let's say it become 40,000. So 5 lakh minus 40,000. This is fair value less cost to sell at the date of classification is held for sale. Okay. Very important aspect of measurement. Whenever an asset has been classified as held for sale, please mind my word. Whenever an asset has been classified as held for sale, the depreciation or amortization will be stopped from that particular date. Okay. What does it mean? It means that depreciation is not going to be charged beyond 30th June. In my example, from 1st July 2019, the depreciation or amortization on such asset is not going to be charged. Why? Because the intent is to receive the future economic benefit through sale, not through the use. And what is depreciation? Depreciation is a consumption pattern of the asset. It is a consumption of the asset. So the intent of the entity or management is not to consume the asset, only to sell the asset, and hence depreciation and amortization should not be charged on this. Okay. Friends, is it okay? Great. So quick questions. What is meant by non-current asset held for sale? Non-current asset held for sale are those assets where the future economic benefit will be received through a sale transaction rather than through a continuing use. What are the criteria for classifying the asset or disposal group held for sale? The criteria for classifying the asset or disposal group as held for sale is sale is the item is available for immediate sale in present condition, ISPC, and sale must be highly probable. For making the sale highly probable, the management must be committed to sell the asset. The active program to locate a buyer has been started. The item has been marketed at a reasonable price. The sale is likely to be concluded within 1 year. It could be beyond 1 year if it is outside the circumstances which is within the entity's control. Okay, and it is unlikely that the sale plan may be withdrawn. Third question, whether asset temporarily taken out of use is termed as abandoned or classified as held for sale. If it is temporarily out of use, it will be classified as abandoned asset. What are the measurement provision for assets which are classified as held for sale? So just before classification as held for sale, the carrying value needs to be calculated as per the respective standard. So depreciation needs to be checked, impairment needs to be checked, then fair value less cost to sale is required to be calculated, and non-current asset held for sale has to be measured or recognized as per lower of carrying value and fair value less cost to sale. And if the fair value less cost to sale is lower than the carrying value, the impairment loss is required to be recognized. If subsequently the fair value less cost to sale will increase, then this increase will be recognized only to the extent of earlier decrease. Okay. And if sale is likely to be concluded beyond 1 year, the cost to sale is required to be calculated at present value. Let's quickly do this case study. Okay. So I have included so many case studies in my PowerPoint presentation, although the case study in the institute study material is very less, but I have included so many case studies in this presentation, and this presentation is also shared with the Board of Studies. A property is purchased for ₹5 lakh on 1st April 2013. The useful life of the property is 20 years. The property is measured subsequently at the depreciated historical cost. On 30th September 2015, it is decided that the property is to be classified as held for sale. So the property was acquired on 1st April 2013. Okay. The residual value is 0 and life is 20 years. What is the per annum depreciation? Friends, what is the per annum depreciation? So Ashita, basically in the sale is highly probable, it is written that sale is likely to conclude within 1 year. But there is an exception which is given. There is an exception which is given that if it is due to outside the circumstances or beyond the circumstances within the entity control. So it is not within the entity control, and that is why it could be later than 1 year. Okay. In that case, even though it will be considered as sale is highly probable if other conditions are meeting. Okay. So this exception is given in the question. But if it is due to the entity's own circumstances, it will not be considered as sale is highly probable. So friends, tell me what is the per annum depreciation? Yes, Preeti. So I will share this PPT for sure. So life is 20 years, and yes, Ambika, depreciation is 25,000. You are right. And the property is measured at cost. On 30th September 2015, it means after 2.5 years. So 31st March 14, 31st March 15, and 30th September 2015. The property is decided or classified as held for sale because classification criteria are met. So friends, after 2.5 years, what is the depreciation? Friends, what is the carrying value on 30th September 2015? What is the carrying value? So what is the 2.5, 2.5 year depreciation? What is the value of 2.5 year depreciation? So Ambika is saying, sir, per annum depreciation is 5 lakh by 20, 25,000. So if 1 year depreciation is 25,000, then 2 year depreciation will be 50,000. Then 2.5 year depreciation will be how much? 62,500, 12,500 for half year. So it is 62,500. Okay. So carrying value on 30th September 2015. Carrying value for cost. What is the cost? Case study 1. What is the cost? Cost is 5 lakh. And what is the depreciation? What is the total depreciation for 2.5 years up to 30th September 15? What is the depreciation? It is 62,500. Am I right? 50,000 plus 12,500. And it is 4,37,500. Okay. And on 30th September, an impairment assessment determine the recoverable value based on value in use to be rupees 4 lakh. Two informations are also given in this question. The recoverable value is given and the fair value less cost to sell is given. 4 lakh and 3,90,000. 4 lakh, 3,90,000. So question is asking what is the carrying value of property immediately before reclassification is held for sale. So it is asking the carrying value and it is asking the required accounting entry for the reclassification of asset as held for sale. So friends, first of all, we need to calculate the carrying value. For calculating the carrying value, what we need to do? We need to do the impairment also. So if there is any impairment loss. Cost to sale and value in use. Okay. Higher of fair value less cost to sale and value in use. It is higher of fair value less cost to sale and value in use. Okay. So in this case, what is recoverable value? Recoverable value is 4 lakh. So in this case, 37,500 will be impairment loss. And the carrying value as per IND AS 16 will be the carrying value as at 30th 9/2015 will be 4 lakh. Am I right? So this is the carrying value before reclassification is held for sale. Now, step 2. What is fair value less cost to sale? Lower of 2. Carrying value and fair value less cost to sale. What is carrying value? It is 4 lakh. What is fair value less cost to sale? It is 3,90,000. So what is lower? 390 is lower. What is the accounting entry? Accounting entry is non-current asset held for sale debit 3,90,000. Again, one more impairment loss will be debited by how much amount? By 10,000. 2 property, plant and equipment will be credited by carrying value, which is 4 lakh. So this will be the accounting entry. So are you able to see the whiteboard? Are you able to see the whiteboard? Friends, please confirm, because 2 students have replied that they are not able to see the display. Is it visible now? Can you please confirm, Pujita or some other students? Okay, so this is the way by which we have calculated the carrying value. So we have reduced the depreciation, we have reduced the impairment loss, then we have calculated the fair value less cost to sell. Okay, and the differential between fair value less cost to sell and carrying value will again charge to impairment loss in P&L. Okay, so friends, now let's break for 10 minutes. It's 8:35 now. 8:35 now, so we'll start at 8:45. In the meantime, if you have any query related to this standard, please post your query in the query link. Okay, so thank you. We will again come back after 10 minutes. So before break, we have discussed that how this non-current asset has to be measured when it is classified as held for sale. So first of all, we understood that we need to calculate the non-current assets carrying value just before the date of classification. So basically, before classifying as held for sale, we need to calculate the depreciation. We need to calculate the impairment loss, and then we need to arrive at a carrying value for that. Okay. Then we have to calculate the fair value less cost to sell. If between the two, whatever is lower, that will be the value for non-current asset held for sale asset which has been classified as held for sale. Okay. So now we are discussing the concept of disposal group. So how to do this in case of a disposal group? Okay. In case of a disposal group, we discussed that disposal group is a group of assets. In the disposal group, there are a lot of assets and liabilities. For example, there is a PPE. For example, there is an intangible asset. Okay. For example, there could be some other assets also. Let's say inventory. Okay. Or for example, there is a liability, financial liability. Okay. So let me take an example. PPE is worth rupees 200,000. Intangible asset is worth rupees 150,000. Inventory is, let's say, 10,000. Financial liability is, let's say, 20,000. The total value of the disposal group is, and let's say there is a goodwill also. So this disposal group is a cash generating unit, and there is a goodwill also. So suppose goodwill is, let's say, 50 rupees. So what is the total here? 200, 400, and 390. 390. This is the value of the disposal group. This is the carrying value of the disposal group. Okay. So now the standard says that in case of a disposal group, for example, this is a carrying value as on the reporting date. For example, 31st March 19. And this disposal group is classified as held for sale on 30th June 2019. So standard says that you need to calculate the carrying value of this disposal group on 30th September 2019. Okay. And standard says that you need to calculate the carrying value as per respective standard. For goodwill, let's say for this goodwill it is 50. For PPE, let's say you need to calculate depreciation and impairment loss. For example, it will become 150. For intangible asset, again you need to amortize and you need to see the impairment loss. For example, it will become 110. Okay. So let's take it as 100 only. For inventory, you have to apply IND AS 2. IND AS 2. Inventory has to be measured at lower of NRV or cost. So let's say it is 8. For financial liability, let's say it is 20 only as per IND AS 109. So the total carrying value of the disposal group as on date of classification is 200, 300, 308 minus 20, 288. Any problem so far? So I am explaining how to deal with the disposal group. Any problem so far? So let me look at the query link. No, nothing. Okay. So friends, we have calculated the carrying value of the assets and liability of the disposal group on the date of classification. Then we need to calculate the fair value less cost to sale. Fair value less cost to sale of the disposal group. Okay. For example, the fair value less cost to sale of the disposal group is 200. Okay. So in this case, the difference, what is the difference between 200 and 288? The impairment loss is 88. So please apply the concept of IND AS 36 impairment of asset. So first of all, what you will do, the fair value less cost to sale, is your 200. So now you have to impair these particular assets or liabilities also. So what will happen? So friends, first of all, सबसे पहले we need to strike off my goodwill. We need to remove the goodwill. Okay. So this goodwill will become 0. Then what to do? So you are not required to touch this financial liability and inventory because this inventory and financial liability is already at fair value. Okay. So the value of inventory and financial liability is no longer lesser than the fair value. Okay. So it means it will become 8 and this will become 20. Now what will happen with the remaining 38? So 50 rupee has been charged as a goodwill. Now 38 has been left. So this 38 has to be allocated in the ratio of minus 38 multiplied by 15 divided by 25. So in the ratio of 150 is to 100. Minus 38 multiplied by 10 divided by 25. So what will come here? So what will come here? So it will come here 38 multiplied by 15 divided by 25. So it will come here like 23. So 150 minus 23. 150 minus 23. 127. Please remember the concept of cash generating unit and the allocation of impairment loss of cash generating unit. 38 multiplied by 10 divided by 25. So 15. Okay, 1500 minus 15, 85. 85. So the total is 127. Let's do the total. 127 plus 85 plus 8 minus 20. So this is coming at 200. So this is the thing, how we need to allocate the impairment loss on disposal group. I mean to say how we need to do the treatment of IND AS 105 on disposal group. Any challenge in understanding the concept of this disposal group? Any challenge? Any challenge? Is it okay, disposal group? Okay. So let's do a case study of disposal group also. So friends, are you able to see the PPT or the case study on this disposal group? If you will see this case study on the disposal group, so following details are given for entity A. Some details are given for entity A. What is given? Goodwill is given, PP is given, inventory is given, financial assets is given, financial liabilities are given, total is 67. And these values are on 31st December 2014, carrying value at 31st December 2014. Let me write here. So particulars, and the items are goodwill, the items are PPE, the items are inventory, the items are financial assets and financial liability. And this is a value as on 31st December 14. Carrying value on 31st December 14. And let me tell you, these numbers are million dollars. Okay. And the values are 16, 28, it is 20, it is 17, it is 14. Okay, and the total is 67. And the total is 67. Okay. So under IND AS, PP would be stated at 26 million and inventory is stated at 18 million. So the values of PPE are given. So on 31st December it was 28, now it is saying 26. And inventory was 20, now it is saying 18. The fair value less cost to sell of the disposal group is 47 million. And the fair value of disposal group is also given, it is 47. Assume that the disposal group would be classified as held for sale. So basically the amount as on held for sale are given. So for two items it is given, for other item it is not given. It means for other item the carrying value on the date of reclassification remains same. Okay. So you are required to disclose how this disposal group would be accounted for in the financial statement for the year ended 31st December 14. So with the help of this case study, we will see how this disposal group held for sale will be accounted for. First thing. Second, how it will be presented in the financial statement. Okay. Friends, is it okay? Okay. So let me jump onto the whiteboard. So carrying value on the date of classification. On the date of classification. Okay. Carrying value on the date of classification. What is the carrying value on the date of classification? The carrying value on the date of classification is, the carrying value on the date of classification is, for goodwill nothing is given, it is 16. For PP 26 is given. For inventory 18 is given, 17 and 14. So what is total? The total is, so -2 has been deducted and -2, -4. So it means it is 63 million. Is it okay? Now what is fair value less cost to sell? What is fair value less cost to sell? So fair value less cost to sell is given at how much amount? 47 million. Am I right? Any query here? Friends, any query here? It is 47 million. Yeah, it's okay. So it is 47 million. So how much impairment loss will be charged on the on this reclassification into held for sale? So how much impairment loss will be charged? Ambika, how much impairment loss will be charged? It is 16 million. 16 million impairment loss is required to be charged. 16 million. And this 16 million has to be allocated. This 16 million has to be allocated to goodwill. First of all, it will be allocated to goodwill. Okay. First of all, it will be allocated to goodwill. -16. So goodwill value will become 0. PP will become 26. Inventory will become 18. Financial assets 17. Financial liabilities 14. Okay. Is it clear? Is it clear? So this is how the treatment of disposal group classified as held for sale has to be done. So this is in the same manner what we were doing under allocation of impairment loss to cash generating unit under IND AS 36. Same principles are there. Okay. So first of all, you need to strike the goodwill. Second, you need to allocate the remaining impairment loss in the proportion of the carrying value of the asset on the date of classification. If a particular asset is at fair value on that particular date, so the impairment loss should not be charged on that particular asset. For example, inventory, your fixed financial asset, your financial liability, these are not required to be adjusted. Okay. So now the question talks about the presentation also. So let me move on to the presentation, my presentation here. So friends, this is the working which I have done on the whiteboard. Okay. And then in the balance sheet, how it is going to be presented. So see, in the asset side of the balance sheet, first of all, non-current assets are there, then current assets are there. So in current assets, below the current asset, there is a line item, non-current asset classified as held for sale for 61 million. So how 61 million has been arrived? How this 61 million has been arrived? So this 61 million is the total value of the asset. It is the total value of the asset. It is the value of 26 plus 18 plus 17. If you total this, it will come out to 61. So 61 has to be shown as a asset of the disposal group, and 14 has to be shown as a liability associated with the disposal group. So the presentation in the financial statement would be like this. So in the current asset side, there will be a non-current asset classified as held for sale 61 million. And in the liability side, under current liability, there is a liability directly associated with non-current asset classified as held for sale for 41 million. And the breakup of this non-current asset held for sale and non-current liability associated with asset held for sale has to be provided in the notes to accounts. Okay. Any problem so far? So Ambika is asking, sir, if impairment loss is equal to 20, then the 4 allocation between PPE, yes, the 4 million allocation has to be done with the PPE. So inventory and financial asset liability will not be adjusted. PPE will be adjusted by 4 million. Okay. Now, a very important aspect, and it is the last aspect of non-current asset held for sale and disposal group. So friends, largely I have covered most of the problem or case study of the institute study material, and even though in my presentation I have given more examples case study in this presentation, which I am going to share with the board of studies. So now we are discussing the change of plan. Sir, for example, the management has changed its mind. The management has changed its plan. For example, the asset is no longer available for sale. The management is not able to sell the asset. Then what will happen? So for example, there is no buyer in the market. No one wants to purchase this asset. Or for example, the demand has been increased widely and now management wants to run all the factories. Then what will happen? Standard says that when the asset no longer met the held for sale criteria, in that case, it has to be reclassified. So change of plan of sale. Change of plan of sale. Change of plan of sale. So if the asset no longer meet the held for sale criteria, if the NCA HFS, non-current asset held for sale, no longer met the HFS criteria, then it shall be reclassified as normal asset, as per IND AS 16, 40, 38 at below value. What is the below value? At below value means at lower of. At lower of. Lower of what? Lower of point number 1. Recoverable value on the change of plan. Recoverable value on the change of plan. Recoverable value on the change of plan. Second, recoverable value on the change of plan. Second, had the asset never been classified, had the asset never been classified as HFS, then what will be the carrying value? Then what will be the carrying value? Okay. So anyone who wants to explain this concept while you're interacting channel, I mean to say while your query link, anyone who wants to explain this concept. For example, I have given you an example. For example, there was a sanitizer company. Okay. So sanitizer company was manufacturing the sanitizer in its 2 factories. So the demand of the sanitizer was not that great before COVID lockdown or before COVID thing. Okay. And they have decided to sell off one of its factory and they have decided to scale the production in only one of the factory. Okay. So now when this COVID things have happened, when this pandemic has happened, which no one was expected, the demand of sanitizer has increased rapidly. Okay. So in that case, whatever the factory was classified as held for sale, the management has changed the plan of sale, and now the management has to wants to continue that factory. Okay. So in this case, this factory will no longer meet the definition of held for sale, and hence, this factory has to be restated from current asset to non-current asset category. Okay. But now at what value? Standard says that it has to be restated at lower of what? Lower of what? Recoverable value on the date of classification. Recoverable value on the date of classification. What is the recoverable value? Recoverable value is higher of fair value less cost to sale and value in use. Second, suppose this asset was never classified as held for sale. This asset was never classified as held for sale. Then what will be the carrying value? Okay. So we need to calculate these two numbers, and whatever is the lower, we need to restate my normal asset on that value. Okay. So let's understand this concept with the help of a comprehensive question which is there in my presentation. So friends, when the held for sale criteria are no longer met, the asset should be removed from the held for sale category. You need to reclassify and remeasure at lower of carrying amount before the asset was classified as held for sale, and it has to be adjusted for depreciation, amortization, revaluation that would have been recognized had the asset not been classified as held for sale, and recoverable amount at the date of change of plan. It means for calculating the carrying value, you need to be normal. If this held for sale thing would not have been happened, then my normal accounting under IND AS 16 will go. Okay, so I have to do my normal accounting and I have to arrive at my carrying value of the date of change of plan. Okay, is it okay so far? Students, can you quickly confirm? Anjali, can you quickly confirm? Preeti, Pujita, Purushottam, Chavi, Kaustav, Shreya, can you quickly confirm? Okay, great. Thanks, student. Thanks. So now we'll discuss this case study. A property is purchased for ₹5 lakh on 1st January 2011. The useful life of the property is 20 years and the residual value is 0. The property is measured subsequently at depreciated historical cost. So the property was acquired on 1st January 2011. The value is 5 lakh, life is 20 years. So what is the per annum depreciation? What is the per annum depreciation? It is 25,000. Okay. On 31st December 2012. So 31st December 2011, 31st December 2012. It means after 2 years, it is decided that the property is to be classified as held for sale. Classification criteria are met. Okay. So after 2 years, this classification criteria is meeting as held for sale. So after 2 years, what will be the carrying value? I mean to say, what will be the cost minus depreciation? In the 2 years, what will be the depreciation? Yes, Pujita, nicely summarized. So Pujita is saying, sir, in normal course of business, charging of depreciation and impairment till the date of held for sale or recoverable amount on the date of change in classification. Okay, good, Pujita. Yes, friends. So what will be the total depreciation till 31st December 12? So 2 years, 25,000 per year. So 50,000 total depreciation, and 5 lakh minus 50,000, 4 lakh 50,000. Okay. Now, an impairment assessment on 31st December 12 determined the recoverable value based on value in use to be 4 lakh, and the fair value less cost to sale on 31st December 2012 is 3,90,000. So first of all, we need to compare. So first of all, while doing the IND AS 16 accounting, we need to see the impairment loss also. What is the impairment loss? It is difference between recoverable value and carrying value. So carrying value is 4,50,000, 5 lakh minus 50,000 depreciation, 4,50,000. Okay. And now what is the recoverable value? It is higher of fair value less cost to sell and value in use. So it is 4 lakh. So 450 minus 4 lakh, it means 50,000 is the depreciation. It means 50,000 is the, 50,000 is the impairment. So 50 is depreciation, 50 is impairment. So carrying value according to IND AS 16 for this property is 4 lakh. Now fair value less cost to sell is 390. So non-current asset held for sale, I mean to say this property held for sale will be valued at 390. So first of all, as per IND AS 16, we have charged an impairment of 50,000. Then as per IND AS 105, we have again charged an impairment of 10,000 while comparing carrying value with the fair value less cost to sell. Okay. Is it clear so far, friends? Is it clear so far? So we have done the HFS accounting. Now, after 1 year, on 31st December 2013, there is a change in plan and the properties no longer meet the HFS criteria. What will happen? There is no change in useful life of the property at any point. So useful life is 20 years only. I mean to say from 1st January 2011, it is 20 years. So on 31st December 12, it is 18 years. On 31st December 13, it is 17 years. So total economic life is always 20 years. Okay. And the recoverable value on the date of change of plan is given. It is 3,85,000. So we need to calculate, had this impairment never been occurred, then what will be the carrying value? Okay. Have you understood? So the requirement of the question is you are required to show how this HFS accounting has to be done and how this change of HFS accounting is required to be done in 2012 and in 2013. I hope the question is clear to everyone. I hope the question is clear to everyone. I hope it is clear to everyone. Okay. So friend, let me solve this particular case study 4 of the PPT. Case study 4 of the presentation. So let me explain this. Case study 4 of PPT. Okay. What is the cost? What is the cost as at 1st January 11? It is 5 lakh. Less depreciation up to 31st December 12. It is 50,000. So it is 4,50,000. Now, on 31st December 12, some informations are given. Recoverable value on the basis of value in use is given 4 lakh. And fair value less cost to sell is given, which is 3,90,000. So in this case, recoverable value will be 4 lakh because it is higher of VIU and FV less CTS. So less impairment loss. Impairment loss 50,000 and carrying value is 4 lakh. The carrying value is 4 lakh. Okay. Understood? Is it okay? Carrying value is 4 lakh. So now, what is fair value less cost to sell? So what is 31st December accounting? What is 31st December accounting? On 31st December 12, this property will be classified as held for sale. So non-current asset held for sale debit by 390. To PPE, 4 lakh. Okay, and impairment loss debit On reclassification, 10,000. Now, what is the carrying value of non-current asset held for sale? 390, and further the depreciation will be stopped. Okay. Now, on 31st December 13, the recoverable value is given on 31st December 13. On 31st December 13, there is a change in plan. Change of plan. Okay. On 31st December 13, there is a change of plan, and the recoverable value on the date of change of plan is 3,85,000. So we have step 1. Now we need to calculate step 2. Had this asset never been classified as HFS, then what will happen? Then what will be the carrying value? Then what will be the carrying value? So this is the carrying value on 31st December 12. Now what will be the carrying value on 31st December 13? So we need to calculate the carrying value on 31st December 13. So please tell me what will be the carrying value on 31st December 13. I'll give you 1 minute. I'll give you 1 minute. Please tell me what is the carrying value after 1 year. Purushottam, what is the carrying value? Chavi, Ambika, Pujita, what is the carrying value on 31st December 13? Had this asset never been classified as held for sale? So friends, the carrying value as per IND AS 16 before classification is held for sale was 4 lakh. So this 4 lakh is going to be depreciated. Depreciation for 2013, that is up to December 13. What is the depreciation? It is 4 lakh divided by, what is the life? 4 lakh divided by 18. So 18 year has been left. 4 lakh divided by 18. Very good, Ambika. So this is a carrying value is 4 lakh as per IND AS 16 because impairment loss is required to be calculated as per IND AS 16. So 4 lakh divided by 18 will give you 22,222. 22,222. So now, what will be the carrying value? The carrying value will be 4 lakh minus 22,222. It is 377,778. Now what is lower? The recoverable value is 385. The carrying value had the asset never been classified as held for sale is 377,778. Now what will happen? Now the entry will be on 31st December 13. The accounting entry will be PPE account debit. PPE account debit by how much amount? Lower of these two. 377,778. To non-current asset held for sale will be credited by how much amount? 3,90,000. 3,90,000. Because the depreciation has been stopped after that. Debit. What is debit? What is this value? So this value could be debited in terms of depreciation or could be debited in terms of impairment loss. So this will go to P&L. Let's say it's a depreciation kind of thing. So it is how much amount? 390 minus 377,778. So it is 12,222. Okay. So I hope this change of plan is clear to all of you with the help of this case study 4 of PowerPoint presentation. Okay. So let me know if you have any query or any problem in understanding this particular case study. So this is the working which is given in the presentation itself. Okay. Any doubt? Any doubt here? Okay. So guys, we have covered non-current asset held for sale, disposal group held for sale. Okay. We have covered criteria for classification of an asset as held for sale. So as far as non-current asset held for sale is concerned, the accounting of non-current asset held for sale is there. The same accounting applies to non-current asset held for distribution to owner. For example, there is a non-current asset building which is given to the owners, promoters of the company as a dividend, okay, or it is given as a distribution to the owners. So same accounting will be applicable. Instead of we'll say fair value less cost to sell, we will say fair value less cost to distribution. Instead of saying it is available for immediate sale, we will say it is available for immediate distribution in present condition. So technically speaking, only the word has been changed, rest everything remain unchanged. Okay. So there is a small concept of asset available for distribution to owner is also there in the IND AS 105. So quickly you can read that concept, and that concept is same as non-current asset held for sale. Okay. Yes. So now coming to discontinued operation. Please remember, when I have started this particular standard, I have talked about an individual asset, a disposal group, and discontinued operation. So what is a discontinued operation? For example, today Tata started saying that I will not manufacture my commercial vehicles segment. So this is kind of a discontinued operation. Or let's say tomorrow Maruti says I'll not manufacture in China. So this is a kind of a discontinued operation. So what is this? This is a kind of a operating segment. Okay. So it is a component of an entity. Discontinued operation is a component of an entity which comprises operations and cash flows that can be clearly distinguished operationally and for financial reporting purposes from the rest of the entity. So same definition which was there for the operating segment, okay, for the segment. So it is a component of an entity. It is a significant component of an entity. It is a significant segment of the entity for which the entity used to derive, the entity used to see the financial results, the cash flows, the performance of the particular segment. For example, if I talk about Tata, so they want to see what is the profit or loss in case of a commercial vehicle segment, or in case of a private vehicle segment, okay, or in case of a, let's say, normal vehicle segment, or in case of a luxury vehicle segment. For example, if you have seen a Maruti model, so just 4 or 5 years back, they come with a model of Nexa. Have you heard about Nexa? So normal cars they will sell in their normal Maruti showroom, and the luxury cars, or let's say high-end cars or good cars, they will sell in Nexa showrooms. Okay, for example, Baleno. So Maruti Swift you will get in normal Maruti showroom, but Baleno you will get in Nexa showrooms. Okay. So what is this? This is kind of a segment which they have distinguished, and they used to assess the performance of these two different sections. What is the performance of Nexa section? What is the performance of normal Maruti section? Okay. So in other words, a component of an entity will have been a CGU or a group of CGU while being held for use. So this component could have a multiple disposal group. For example, the company is manufacturing a product in 3 factories. So every factory is a disposal group, but this set of 3 factories is a discontinued operations. It means it is a combination of the disposal group. Okay. It means it is a curtailment of the major line of product. It means it is a curtailment of a major geography or location of that particular part of the company. Okay. So a discontinued operation is a component of an entity that has been disposed of. Okay. So the company has stopped the production. Okay. Or is classified as held for sale, or this entire discontinued operation has been classified as held for sale. So one of the students was asking that, sir, whether discontinued operation is also classified as held for sale. So I have not replied at that point of time, and I have parked that question. So yes, I believe Ambika was asking. So yes, Ambika, this discontinued operation is also classified as held for sale. So Classified as held for sale, I mean to say, discontinued operation assets and liabilities are required to be measured at fair value less cost to sell. Okay, so carrying value versus fair value less cost to sell is required to be checked, and if there is any loss, it is required to be debited to P&L. So a discontinued operation is a component of an entity that has been disposed of or is classified as held for sale and represent a major line of business, geographical area of operation. It is a single coordinated plan to dispose of a separate major line of business or geographical area of operations. For example, the company has some outlet. Okay, so the company has decided that we will wind up all the outlet in the North India. We will wind up all the outlet in North India. So what does it mean? It mean it is a part of single coordinated plan that the company will discontinue all the outlet from the North India. Okay, so this is known as a discontinued operation, or it is a subsidiary acquired exclusively with a view to resell. So the company has acquired a subsidiary, and the objective of the subsidiary is to sell the subsidiary. Okay, objective of acquisition. So it is also considered as a discontinued operations. So friends, I hope you have understood the concept so far. As far as discontinued operations are concerned, so there is a requirement of presentation and disclosure in P&L. Okay, so I'll explain what is the requirement. Okay, so what is the case study? Let's discuss this. But please confirm, before I move on, please confirm you have understood everything so far by heart. Everything is clear. Everything is clear. There are two kind of clarity. One is clear, so clear in mind. The second is all clear, means you haven't understood anything. So I hope it is upper wala clear or it is bottom wala clear. Okay, so students are replying, sir, it is upper wala clear. Great. So Sun Limited is a retailer of a takeaway food like burger and pizzas. It decides to sell one of its outlets located in Chandni Chowk in New Delhi. Okay, so Sun Limited is a retailer of takeaway food, and it decides to sell one of its outlets located in Chandni Chowk in New Delhi. The company will continue to run 200 other outlets in New Delhi. So the company has around 201 outlets, and they want to sell one outlet in Chandni Chowk, but they will continue to run all the other 200 outlets. All IND AS 105 criteria for held for sale classification were first met on 1st October 2016. The outlet will be sold in June 2017. So the classification criteria is meeting. Management believe that outlet is a discontinued operation and wants to present the result of outlet as a discontinued operation. So friends, what is your view? Is this outlet an asset classified as held for sale? Is this outlet a disposal group classified as held for sale, or is this outlet a discontinued operation? What is your view? I'll give you 1 minute. What is your view? Please think. What is your view? Is this outlet a non-current asset held for sale? Is this outlet a disposal group held for sale, or is this outlet a discontinued operation? What is your view? Pujita, what is your view? So friends, please remember, this outlet is not a component of an entity. This outlet is, let's see the definition of component. And tell me Whether this outlet represent a separate major line of business, answer is no, because 200 outlets are there. Whether this outlet represent a geographical area of operation, answer is no, because in Delhi 200 other outlets were operating. If somebody will not go to Chandni Chowk, somebody will go to the outlet which is located other than Chandni Chowk. Okay. So is it a part of single plan to curtail down all the outlet? Answer is no. Is it a subsidiary acquired with a view to resell? Answer is no. So friends, it is not a discontinued operation. It is a disposal group. It is a disposal group. The Chandni Chowk outlet is a disposal group. It is not a discontinued operation, as it is only a single outlet. It is not a major line of business or geographical area, nor a subsidiary acquired with a view to resale. Okay. So yes, Ashita, you are right. It is a disposal group. Preeti, it is not a discontinued operation. Yes, Pujita, you are right. It is a disposal group. Now we need to understand the presentation and disclosure of discontinued operation. How it is going to be presented and disclosed. You must have seen in Schedule 3 also. So you are required to show the numbers of discontinued operations separately. Why it is required? So let me tell you. First of all, why it is required to present the numbers separately for discontinued operation? For example, this is a company A. This is a Limited. So A Limited deals into three products. Let's say PQR. So A Limited is continuing these two products PQ, and A Limited has discontinued this product R. So let's say this is financial year 1920. So A Limited has discontinued this product R from 1st October 19. Okay. So this is an important component, and hence the numbers are there for reporting purposes. So management is already reviewing the financial position, performance, and cash flows. Okay. So for example, the revenue from continuing operation, the revenue from P and Q is 1000 crores. And the part revenue from 1st April 2019 to 30th September 2019 is, let's say, 200 crores. The total revenue of the company for the year 1920 is 1200 crores. Am I right? And the cost, let's say cost part on this 1000 crore is, let's say, 700 crores, and its 200 is, let's say, 100 crores. So I am talking about the operation. When this R component was operational, there was a revenue, there was a cost. Then there is a PBT. Okay. Then there is a tax. Okay. Let's say tax is at the rate of 25%, 75 and 25. Then there is a PAT, which is 225 and 75. Am I right? And there is a loss. There is a loss on the comparison between fair value less cost to sell and carrying value. So there is a loss also. So let's say that loss has to be shown separately. For example, it could be, let's say, it could be part of the cost. Okay. So the thing is, why Schedule 3 and why standard talks about the separate disclosure of discontinued operation? The separate disclosure of discontinued operation is required because when the company will present it separately, the user will understand. The user will understand that this is a discontinued operation, and these number, the revenue of 200 crores, 100 crores, 100 crores PBT, 25 crore tax, 75 crore PBT will not come in future. Will not come in future. So this is the revenue from PQ, which is going to be repeat in future, which is going to come in future, so that they will take a decision accordingly. Or if they need to compare the previous year numbers with the current year numbers, they will be able to understand that this R is for the part period only, and the revenue related to R product is only 200 crores, so that the user will evaluate and understand what is the impact of this discontinued operation in the financial position and performance. So that is why the P&L numbers of discontinued operation is required to be presented separately. Okay, it is required to be presented separately, even though earning per share from the continued operation and from the total operation is required to be presented separately. Okay, so let me move on to my presentation once again. An entity shall disclose a single amount in the statement of profit and loss comprising the total of the post-tax profit or loss of discontinued operation. So what is this? This is 75. The post-tax profit is 75. And the post-tax gain or loss recognized on the measurement to fair value less cost to sale or on the disposal of the asset or disposal group constituting the discontinued operation. So the entity can decide for disclosing the two numbers. One, from the operation, what is the profit after tax? It could be loss after tax, it could be profit after tax. Second, while doing the comparison of carrying value with fair value less cost to sell, what is the post-tax gain or loss? Okay. And if the company has disposed of some disposal group which was part of the discontinued operation, then what is the profit or loss? What is the post-tax profit or loss on such disposal? Have you understood so far? Have you understood? The second part, an analysis of the single amount. Now the company has disclosed the single amount like this. Let me show you. So what is the single amount? So this is the single amount. Are you able to see the section discontinued operation? Are you able to see the section discontinued operation? So net profit for the period of discontinued operation. If there is a profit or loss on disposal or between the carrying value versus fair value as cost to sale, a single line will come also. Okay. So this is the single line item. Now the single line item analysis is required to be done in the notes to accounts. Into the revenue, expense, PBT, tax, PAT. Okay. Then your gain or loss on disposal, gain or loss on reclassification, its tax impact, then post-tax gain or loss. Okay. So the analysis may be shown in the P&L or in the notes to accounts. So this entire analysis could be a part of the line-wise item of P&L, or it could be a part of the notes to accounts. If the company does not want to make the P&L very heavy or bulky, okay, then what the company can do? The company can just put the two separate line item under discontinued operation. One, post-tax profit of discontinued operation. Second, post-tax gain or loss on account of reclassification as HFS or on disposal of such disposal group coming under discontinued operation. And the analysis is required to be done in the notes to accounts. What is revenue? What is cost? What is PBT? What is tax? What is PAT? Then what is my carrying value versus fair value less cost to sell gain or loss? Then my tax, then my post-tax gain or loss. Okay. Friends, is it clear to all of you? Friends, please confirm, is it clear to all of you? Yes or no? Yes or no? Is it clear to all of you? So before doing this MCQ, let's do the Maggie time. So it's time for a Maggie time, then we'll do this true or false. So friends, from beginning, we have understood that this is a standard which talks about non-current asset held for sale. This talks about non-current asset, which is classified as held for sale. Okay. So this standard talks about three kind of thing. One is your non-current asset held for sale. I mean to say individual asset. Second, it talks about group of asset, which is disposal group. And in disposal group, there could be a combination of current asset and non-current asset. And even though liabilities could be there in the disposal group. Okay. Then there is a concept of discontinued operations. Friends, after that, we have understood and discussed that an item has to be classified as held for sale when it is meeting some criteria. And when it is meeting that criteria, it has to be reclassified from non-current to current. Okay. So then we have discussed the criteria that the asset should be available for ISPC, immediate sale in present condition. Intent and ability should be there, and sale must be, and it is not or, and sale must be highly probable. Okay. And in sale, for making a sale highly probable, there are 5 conditions which is given in the question in the standard. So one is management is committed to plan to sell the asset. Active program for locating a buyer has been started. Okay. Then it is marketed at a reasonable price. It is unlikely that the plan may be withdrawn, and sale is likely to be concluded within 1 year. The only exception is it can go beyond 1 year if it is beyond the circumstances within the entity's control. And if it is beyond 1 year, then cost to sell is required to be discounted at present value. As far as measurement is concerned, so this non-current asset and disposal group held for sale has to be measured at lower of fair value less cost to sale and carrying value on the date of classification. So the carrying value on the date of classification of the respective asset and liability has to be calculated as per the respective standard. For example, in case of IND AS 16, you need to calculate the depreciation, you need to calculate the impairment loss, if any. Okay. So after that, if there is a loss between the carrying value and fair value less cost to sell, it will go to P&L. It will go to impairment loss. Okay. Then friends, then we have discussed subsequently if there is an increase in fair value less cost to sell, then it will be reversed to the extent we have debited our P&L with the impairment loss. Then we discussed disposal group concept. It is like a cash generating unit. In disposal group, if there is an impairment loss, first of all, you hit the goodwill. If any loss is remaining, you hit the remaining asset on a pro rata basis, provided if an asset is at fair value like inventory, like financial asset, it should not be go down by this impairment loss. Okay. Then we discussed the concept of change of plan. If there is a change of plan, in that case, you need to calculate the recoverable value on the date of change of plan, and you need to calculate, had the asset never been classified as held for sale, what could be the carrying value in the normal scenario. So whatever is the lower, with that lower, that asset has to be restated as a normal asset. Okay. Any difference will be there, will go to P&L, be it a higher or lower, whatever is there, will go to P&L. Okay. So friends, then we discuss discontinued operation. Discontinued operation is a component of an entity. It is a segment of an entity for which the entity is preparing its results. Entity is reviewing its results. Okay. And an entity can continue to depreciate an asset even if it classified it as a non-current asset. So discontinued operation is a component of an entity which includes a major line of product, geography or location, and is part of a single plan which includes the curtailment of major product or major line of operation. And it could be a subsidiary acquired with a view to resale. Okay. So we have done a case study of Sun Limited. So now it's time to have some true or false or some MCQs. An entity can continue to depreciate an asset even if it is classified it as a non-current asset held for sale as per IND AS 105. True or false? Answer is false. Yes, Ambika, you're right. Answer is false, because when the entity has classified as asset as a non-current asset held for sale, the depreciation will be stopped, because depreciation is on the consumption of the asset and the intent of the entity is to sell the asset. Asset classified as held for sale must be presented under the appropriate asset head with a separate disclosure in the note. False. So there should be a single line item. If you will see the Bharti Airtel balance sheet, you will find an asset held for sale as a separate line item in the balance sheet. But the breakup of asset held for sale has been given in the notes to accounts. Okay. So great students. Most of the students are right. Yes, it is first false and second is also false. So second is not true, Preeti, it is false. Under IND AS 105, an entity is committed to distribute the asset for disposal group to the owners. That is, the asset must be. Remember, I told you that if the asset is held for distribution, the concept is same. Only the sale will be replaced with the distribution. So the asset must be available for immediate distribution in their present condition, and the distribution must be highly probable. Option number B, available for immediate distribution in their existing condition, and the distribution must be virtually certain. Available for immediate distribution in their existing condition, the distribution must be reasonably certain. Available for immediate distribution in their present condition, and the distribution must be virtually certain. What is the right answer? Friends, what is the right answer? Question number 3, what is the right answer? What is the right answer of third? It is available for, what was the condition? Immediate sale in present condition. Instead of immediate sale, the word should be immediate distribution in their present condition. and the sale is highly probable. Instead of sale, distribution must be highly probable. Okay. So A is the right option. A is the right answer. Fantastic students, fantastic. Absolutely amazing. So how to measure a non-current asset or disposal group that ceases to be classified as held for sale? So when there is a change in plan of held for sale, so how to calculate that? How to calculate that non-current asset or disposal group which ceases to be classified as held for sale? Lower of carrying amount which would have been had the asset not been classified as held for sale and recoverable amount. Lower of carrying amount on the date asset ceased to be classified as held for sale and recoverable amount. Lower of carrying amount and fair value less cost to disposal. Lower of carrying amount and the amount which would have been had the asset not been classified as held for sale. Tell me what is the right answer of fourth. Chavi, what is the right answer of fourth? Ambika, what could be the right answer? Yes, it is lower of carrying amount which would have been had the asset not been classified as held for sale and recoverable amount. So A is the right answer. A is the right option. Yes. So thank you very much. So Meggy time is over now. I hope you have understood this IND AS 105 non-current asset held for sale and discontinued operation properly. I would request you, it's a small standard, it's a 20 pages or 25 pages standard in the study material. I would request you to go through with the entire text of the study material along with the examples and case studies which is there. So although I have covered all the examples and case studies of study material largely, and I have also included some additional example and case studies in my PPT. So this PPT will be shared today, and I request you to please go through with the standard today only so that it will remain in your memory. Okay. So thank you so much, friends. Thank you so much, students, for your patience listening, and stay safe, stay happy. Thank you so much. We'll meet you soon.